From the library of the New York Stock Exchange at the corner of Wall and Broad Streets in New York City, you're inside the Ice House, our podcast from Intercontinental Exchange on markets, leadership, and vision in global business. The dream drivers that have made the NYSE an indispensable institution of global growth for over 225 years. Each week, we feature stories of those who hatch plans, create jobs, and harness the engine of capitalism. Right here, right now at the NYSE and at ICE's exchanges and clearinghouses around the world. And now welcome inside the Ice House. Here's your host, Josh King of Intercontinental Exchange.
Over the course of nearly 250 episodes of this show, we've welcomed a lot of founders of companies to our microphones. Then there's something about the spark in their eye that's tangible. They can't wait to tell you their story, the problem they're solving, and above all, their vision to help change the world, even in a small way. Private equity is so often the umbilical cord between these leaders and the capital that they need to execute on their vision. Here in the U.S., there's a long history of putting money to work in this way. In what was called the deal of the century, back in 1901, J.P. Morgan himself acquired the Carnegie Steel Company to form U.S. Steel. The price of that was $480 million back then, perhaps the first modern buyout in history. But what if you're not in the U.S.? Say you're in Argentina, Nigeria, or India, and you have a brilliant idea or think you can manage a business better than it's being run, or you believe you can take a company to the next level before it goes public. Innovation knows no borders. There are tons of examples of these kinds of businesses. Take Rappi, the Colombian delivery platform, or Bijous, the Indian edtech company, or even Alibaba. That's NYSE ticker symbol BABA, Baba. For a long time, there really wasn't any place for investors to get in on the ground floor of private businesses beyond developed markets. There were structural inefficiencies, financing gaps, huge aversions to risk. In some parts of the world, there also wasn't a culture of private investing. In some places, there wasn't even a history of capitalism. But investors persisted. They saw promise and economic growth that these faraway places and founders had in them. They just needed to find a way to source new opportunities and carry out the due diligence necessary to protect their partners. And that's where today's guest comes in. Investors need data, research, and connections to help them understand the regulations, regimes, and opportunities in these lesser-known places. They grew into a mission to connect key market participants with deals that drive investment returns and meet societal needs across the globe. Cate Ambrose heads that effort and steers a prominent organization that represents private capital investors managing more than $2 trillion in assets across Asia, Latin America, Africa, Central and Eastern Europe, and the Middle East. The Global Private Capital Association helps investors share their experience, data, and learnings in one place, all while bringing transparency, analysis, and bringing to light stories about how private capital is transforming the world. Our conversation with Cate Ambrose is coming up right after this.
Now a word from ABB Limited, NYSE ticker ABB.
ABB Formula E. It's today, it's the future, and it's electric. Champions will rise, and a single inspired moment can make history. For ABB, this is more than a race. It's part of rethinking how we can live, work, move, and produce without consuming the earth. By bringing great teams together, we create and innovate the technologies that tackle the challenges our world is facing, today and tomorrow. We're bringing ABB Formula E to cities around the world to share our vision of driving progress towards a smart and sustainable future. ABB Formula E, more than a race.
Our guest today, Cate Ambrose, is CEO of the Global Private Capital Association, or Gpca, the Global Industry Association for Private Capital in Emerging Markets. Members include more than 300 fund managers, institutional investors, family offices, sovereign wealth funds, development finance institutions, and industry advisors who manage more than $2 trillion across 130 countries. Welcome, Cate, inside the Ice House.
Thank you, Josh. It's a pleasure to be here.
So if I've got my history right, before you entered the world of private capital, you were a journalist. What was your beat and what led you to reporting?
Even a little more complex than that. So writing was my first love, in high school, and that evolved into journalism at the same time that I was studying abroad in Spain, my junior abroad in college. And by the time I was finishing school, I had written a multi-field major for journalism, Latin American focus, and Spanish, and moved back to Spain after graduating college. And because I was in a very different part of the world, I think my career path was affected by the opportunities in that market. I covered the Mideast Peace Conference for CBS News. I did a series of trips around Spain and Portugal, interviewing political and private sector heads for advertising supplements, which was what the opportunity at the time, and wrote a series of articles on a range of topics for some local publications. But my interest really was in economic development across global markets and in Latin America in particular.
I've watched a couple of your interviews on CNN International where you speak Spanish, but your bio also says that you're fluent in Portuguese, so you also have a little Mandarin. Now, I've got a nephew who seems to master new languages the way I devour new microbrews. What does a wiring for different languages do for seeing opportunities around corners?
For me, language is the portal into feeling that I'm close to another part of the world, and it's something that I understand and feel close to. For me, the experience of traveling to Argentina and speaking Spanish, or Brazil and speaking Portuguese, just means that I have a different set of relationships, and I'm able to understand, that part of the world much better. And that's something that I'm always seeking out to do no matter where I'm traveling. For example, India is a country that I've traveled to many times. And fortunately, another language is not necessary there, but I'm still looking to get plugged into, because at the end of the day, it's not about understanding a financial opportunity. It's about understanding the market, understanding the people, understanding the culture, developing personal relationships, establishing trust. And language is an absolute critical piece to crossing that bridge.
At the end of June, your organization, the Emerging Markets Private Equity Association, or EMPEA, was rebranded as the Global Private Capital Association, or the Gpca. Now, my company, ICE, recently underwent a big branding exercise, and I wanted to compare notes. Why was it important to rebrand, and what are you hoping to accomplish under the new moniker?
Yeah, I'm going to even take a step back from there and just touching again a little on my career evolution. I spent 10 years building and running the Latin American Association, or the Association for Private Capital Investment in Latin America, headquartered again here in New York. And it was from that experience that I was then approached and really learned and got to know the industry and in some cases the global context as well. I did travel internationally on behalf of LAFCA to Asia and other parts of the world. But in coming into the role in what was at that time EMPEA, the Emerging Markets Private Equity Association, before I took on that challenge and that opportunity, I had a very specific vision in mind. And fortunately, the context was right, working with the board of directors of EMPEA to think about that repositioning and what we wanted to achieve with the organization. So for me, one of the key starting points was to do away with the emerging markets terminology. To my mind, as I'm sure you appreciate well, it's incredible how language influences how people think about things. If you think about when BRIC was created, the concept of Brazil, Russia, India, China, I look back on that and, I think it doesn't need to be me who will say it. Others will say these countries have nothing in common with each other and how they've developed had nothing. But at a particular point in time, there was a concept around that, and it was amazing how sticky it was. I would hold the same is true for the emerging markets terminology. Very difficult to replace, I know, because I spent 2 years working on thinking about how to refer to our markets. And there was a lot of definition coming from a very Western mindset. So again, let's call them growth markets, or let's call it the next generation markets. What I would say is I'm interested in building and running an association that is represented by the key players in these markets. There is extraordinary wealth, very successful fund managers in their own right, or are local to these markets. International players have local offices and people on the ground there. And I didn't want to run an organization that was perceived as being a US lobby group or a Western lobby group into these markets, but rather that acknowledge the incredible scale of these economies, the wealth, the opportunity, the local players, and doing away with that emerging markets terminology. And another key piece here is that obviously we're talking about dramatically different parts of the world. I mean, I guess most of the indices still throw China in there. I mean, in what context are you talking about China as an emerging market? It's clearly not. It's one of the largest economies in the world. And just looking across global markets, you can't throw China in with the same bucket as you're throwing Argentina or Nigeria or other parts of the world. So it was critical to come up with new language around that. And then private equity, we evolved into private capital as a reflection of private credit, which has become an expandingly, important part of what's being invested, the strategy that's being used in our markets as well, in addition to venture capital and infrastructure and real estate, real assets, et cetera. So the rebrand was really important.
Was part of the strategy as well the move, I guess, on your headquarters, both from DC to New York City, but also co-headquartering in Singapore?
Absolutely. So to give the back history, Ampere was originally founded through a partnership with the International Finance Corporation of the World Bank, the IFC, and they were among the first limited partners in private equity funds globally. So it was a handful of people at the IFC who started hosting a conference around investing, private capital and investing in emerging markets, and PIA sort of grew out of that. So there you had the headquarters in Washington, D.C. To me, coming into this role a year and a half ago, it was very important to not be headquartered in a political capital. One of the things that I really love about this platform and the way it's structured, we're a nonprofit, which is great, and we're global. And I didn't want to be perceived as representing the U.S. government or, in that context, even though we still work very closely with the IFC on a conference, the World Bank or the IFC. I wanted to be seen as an independent, nonprofit, institutional organization representing investors around the world. And New York's a great place to do that from. In terms of Singapore, I'm sure I don't need to tell you how dynamic Singapore, and this has been going on for years, but really accelerated over the last year and a half as well. So delighted that we've been able to open an office in Singapore. We did that in partnership with the local government, the monetary authority there, who's co-funding that office. We have 3 Singapore nationals working there, producing research for us. And Asia is a big area of focus. It's clearly, from a scale perspective, the most exciting and largest part of the world.
For the first decade of the century, Cate, and the 2010s, really, investment in emerging markets, private capital increased, I guess, about 8-fold, from maybe $3.7 billion in 2001 to $29.2 billion in 2015. Now, private capital, by its nature, far more difficult to track and analyze than other financial assets. A fundamental pillar of GPCA's work is generating data, intelligence, and deal cases to help drive transparency and showcase innovation across global markets. Can you tell us a little bit about how you go about sourcing and publishing the data?
I'm going to take a step back into when I initially launched our data program for Latin America in 2008. And by definition, private equity is a very secretive industry, or historically has been a very secretive industry, more so even at that time. And then not a lot of transparency in countries like Brazil, Mexico, Argentina, again, in terms of getting data. So it was critical that we, again, developed close personal relationships with our member firms and had them understand how we're using this data. So Preqin or Refinitiv or others are commercial providers of data, but our members know that we are producing this information to evangelize global capital to go into their market. So they have a vested interest in making sure that they're sharing deal data with us, that we know about their exits. And there's always a challenge. We don't get everything. There's always something that won't be shared. But having the personal relationships with the GPs is really important to being able to position the markets and typically educate institutional investors about the opportunities. So that was something that I built initially and in Latin America, and coming into the role now at GPCA is actually phenomenal back-end infrastructure. We have 9 people on the research team between Singapore, New York, and a couple of people in Latin America. We have a research team of 9 that are all day long searching secondary sources and then connecting on a primary basis with our member firms and other investors in the market to collect data. It's just so easy to talk about what's going on at 10,000 feet. I mean, this will translate through to any conversation you and I have about ESG, et cetera. Mm-hmm. Being able to point to specific transactions and see what's actually going on in the ground is something that I love. It's something I really love about private markets as opposed to public markets. You're just so close to the deals and able to see what's being invested in and tell the story of the opportunity through the case of each individual investment, in addition to aggregate data, I think is a really valuable resource.
So help open up the aperture a little bit on this process. What challenges do these investors face when they're going out and looking for those private capital opportunities in other parts of the world? And how does GPCA fit into the puzzle?
Many of our members are local managers on the ground in Indonesia, Malaysia, India, Brazil, Mexico, Middle East, et cetera. So the members that we represent are often sitting in those markets, have deep local networks. One place where you see fund management firms emerging is out of family offices. So a family office that has a set of relationships, as an industrial group or something else, spins out something that was part of the family office into a separate group, or people who were working in investment banks and have this set of local relationships. So actually, I wouldn't say deal sourcing is ever easy, right? But actually, it's not the most challenging part of being successful in these markets, because typically the conventional wisdom is you have to be local, right? You need to have foot on the ground. Now, we have seen some international firms that over years have built a successful models partnering locally with others that, have a headquarters in New York or somewhere else, and then co-invest or partner with others. Of course, Canadian pension plans and many big international groups are investing into these markets. But the deal sourcing side is precisely where the opportunity is arguably more attractive and less competitive than in the United States or Western Europe. There are simply many more, a much larger universe of companies or startup opportunities that are starved for capital and are looking for capital. The challenge typically comes around issues like currency volatility, macroeconomic cycles, navigating through cycles, just some of the volatility that's inherent in some of these markets. That's what's making it a little bit more difficult, but the deal sourcing side is actually quite attractive.
What about the government side? I mean, you're used to sort of dealing with the regulatory environment here, or many of our listeners are, but are you finding that governments in these countries are friendly to private equity, or is there a tension between state-owned businesses and private founders?
My experience has been that overwhelmingly that governments across many markets are very actively looking to encourage private equity and venture investment into their markets. They view it as on par to foreign direct investment, because we're not talking about short-term speculation with currencies or in and out of public exchanges, but rather committing hundreds of millions or billions of dollars to businesses on the ground, infrastructure projects, transforming the corporate governance of family-owned businesses. There's an incredible value add to the money that goes into these markets. And my experience is that I've been invited by heads of state, more experience in Latin America, but in other countries as well. Certainly in Africa, India. China's a more complicated place, but let's look at China and look at all of the venture funds, that you see that came out of the US and are successful there today. So governments are actually very, very welcoming of both creating a domestic private capital ecosystem, often with like local pension funds, backing fund managers, or public programs. Many countries have government fund of funds that will back local managers to develop a local ecosystem. And at LAFCA and now at Gpca, we play a role talking to those groups and giving advice on policy frameworks or ecosystem development. Having said all of that, that doesn't mean that governments don't create a whole host of challenges for investors as well. And I think fast forwarding over the last 20 years and the many lessons that have been learned through, hard knocks and challenges and macro cycles, the takeaway is do not rely on, public policy or GDP growth. As a private capital investor in these markets, you need to be smart enough and sophisticated enough to identify opportunities that are going to be, relatively uncorrelated with macro trends. You're not looking to invest into highly regulated industries. I think that's one of the reasons that the tech sector has become so attractive across these economies.
So if you're not focusing on regulated industries and you're not focusing on particularly on the macroeconomic environment, but what thematic opportunities link some of the investments together? What trends are existing across the deals that general partners are taking advantage of these days?
You're starting from a lower base of consumption. As you referenced in your intro, you have structural inefficiencies. There's just less capital available from banks or traditional financing sources, right? So even before you get into the sectoral trends, there's just, goes back to the same thing on generating deal flow. There's just a bigger opportunity in so many of these money markets to put capital to work. It's just less competitive. And the GP maybe has more work to do than arguably in the US or Western Europe, right? You're going and you're rolling up your sleeves. You're really transforming these companies. You're addressing governance, et cetera. So even though you're not necessarily relying on a macro trend, doesn't mean that you're not looking at a fundamental opportunity across so many of these other markets for growth within a sector. Now, in terms of key drivers today, I would cite two that are just overwhelming. One is climate. Mm-hmm. And we see that globally, right? So, to the same extent that you've seen the extraordinary focus on climate investing and so many more both publicly traded but also private funds focusing on climate related strategies across global markets, that represents everything from, energy transition to circular economy, data centers where they're looking for efficiency. So there's an enormous amount to do in the climate space, and there's an opportunity to put a climate lens, food tech, ag tech, et cetera, on almost anything that you're doing. And that's very timely now. So there's a great opportunity to focus on the climate opportunity across these markets. And then the other big piece is, I'll use innovation as a bigger theme, but really it's digitalization and the application of technology, but also life sciences as well. That has become a massive driver that's only been accelerated with a pandemic. And so when you think about the technological evolution in these markets, you're starting from a place where there's an opportunity to bypass or leapfrog some of the legacy, infrastructure and systems that were in place. The U.S. is one of the last places in the world, or Western Europe, where you see people paying with cash. In China, there just is no cash. In so many other parts of the world, huge parts of the economy are relying on fintech or digital payments. There's just an opportunity to really accelerate that. Ed tech, health tech, and then besides even the sectors where you're looking at technology startups, you have the digitalization of traditional businesses. Again, greatly accelerated by the pandemic, and technology infrastructure. Some of the most successful deals that we've seen out of these markets in the last few years have been IPOs of cell towers in Africa or fiber optic networks. Again, data centers, as I mentioned, has been a huge play. So there's an enormous amount to do around technology. It's a very cross-cutting theme, and not just with the fastest growing startup, but just the opportunity to implement digitalization across all sectors.
Climate, innovation, digitalization. After the break, we're going to dive deeper into Cate's outlook on the markets, the specific regions that Gpca focuses on, and what's happening in the future for private investment overseas. That's all coming up right after this.
Hi, I'm Axios business editor Dan Primack, host of Axios Recap, a new weekday podcast featuring interviews that get straight to the point. My guests are business leaders, politicians, and reporters driving the day's biggest stories. We're joined now by Jalen Rose.
Thanks a lot.
Bill Ackman.
Thank you so much.
Senator Amy Klobuchar.
Thank you, Dan.
Steven Soderbergh.
Thanks for having me.
Andrew Yang.
Thank you. It's a pleasure.
You can find Axios Recap on Apple or Spotify or wherever you like to listen to podcasts.
Welcome back. Before the break, Cate Ambrose, the CEO and board member of the Global Private Capital Association, and I were discussing her background, her thoughts on emerging markets, and some of the events that are shaping the private capital landscape. Cate, as the vaccine rollout continues in the U.S. and Europe, the delivery in other parts of the world, especially the places that the Gpca focuses on, has been a lot more sporadic. COVID-19 is set to have this disproportionate impact on emerging markets, using that phrase again, and frontier economies. How has COVID-19 transformed the landscape for private capital across these places, and what's the role of private capital in fighting the pandemic?
Well, healthcare has been a very important sector for investment for a number of years across Asia, Latin America, Africa, Central and Eastern Europe, and the Middle East. So it was already a place where we saw a lot of private capital money going into everything from health platforms and insurance to hospital chains to biotech and life sciences. And that has certainly accelerated during the pandemic. China was just an extraordinary year. In 2020, we saw record investment in life sciences and health. And there's no question that private capital is playing a role not only in delivery and logistics, that's definitely a key piece, and how medicine is getting distributed, but also they need to think at the level of their portfolio companies. Some of them are employing thousands and thousands of people in sectors where they might be on the front line or be interacting. And it's been a challenge for them to think about how they manage that. For example, Advent International bought Walmart in Brazil a few years ago. It's now Grupo Big. And I know that was a big push for them, was to shift think about in response to the pandemic, how they were managing those employees, who was on the front line, how they were being protected, how employees were being supported, but also the pivot to e-commerce, right? So coming to that piece, like in other parts of the world, there's just been an acceleration of remote access and technology as a driver of opportunity. So just like you've seen in developed markets, tourism, any sectors where you're seeing, the requirement, restaurants, et cetera, have been hit harder. But there's been a massive pivot, in some cases with lighter infrastructure than you might have expected to see in other parts of the world, to be able to pivot to digital delivery. So e-commerce was already growing. We've seen a number of cases of member firms where they started pivoting from a traditional retailer to an e-commerce player. EdTech has been accelerated dramatically. India, when you mentioned Bijus in your opening remark, it's now actually the most valued startup in India, ahead of some of the e-commerce players and fintechs and others. So I think digitalization is where you've seen the opportunity grow. Obviously, there's a massive human capital cost to these countries, and it's something that we as an organization care about and are focused on. But from an investor perspective, what we see is looking for solutions, increasing digitalization, increase in investment in healthcare and life sciences, and just thinking about the role of private capital in supporting employees, staff, and workers through a very difficult cycle.
You've got, Cate, deep connections with the United Nations, having served as the chief of advocacy for the Commission on Legal Empowerment of the Poor at the UN Development Program, and also as a steering member for the UN Institutional Investor Partnership for Sustainable Development. Why is global cooperation in the private capital space so important?
Over the last several years, we've seen this increasing isolationism. Frankly, it's too late to turn back the clock. Our economies are very, very interlinked, and obviously it's a complex moment with China, but you take a look at the Chinese VC ecosystem or investment ecosystem, it's impossible to pull apart the pieces of the US firms that went to China 20 years ago or more, the Chinese people who work for those firms and spun off and raised their own funds. And one of the things I love about the Gpca platform is the opportunity to say, continue to engage with a country like China, where you see so much complexity. It doesn't, it's not advocating for one side or the other. It's just saying engagement. The moment that we go into our silos, you really have limited the opportunities for coming up with solutions and something that's going to, have a successful outcome all the way around. So I would say, using China as one reference point, many of our member firms, be they institutional investors investing in Chinese funds or private equity firms or venture firms that started out of a U.S. group or developed locally. Our board member, JP Gann of Insa Capital, originally worked for Carlyle, then worked for Qiming, which was a leading Chinese VC, and then spun out and raised his own dedicated venture fund with a lot of LP commitments from U.S. and other markets. So that kind of interaction is important. More broadly, climate, pandemic, speak for themselves, right? So if climate change is not a problem that we're going to solve internally within the US, within any country in Europe. It's only going to be a problem that's solved with collaboration and then innovation and the private capital money that can go into, be it electric vehicles, be it, again, all the different ways, renewable energy, all the different types of platforms and solutions that we see across these markets require cooperation, require private capital investment. And the irony is there are trillions of dollars of liquidity floating around between sovereign funds, Canadian pension plans, private equity funds, venture funds, private credit. There's a lot of capital available for investing in these areas. And sometimes governments that are not need to play a critical role, but are not able to be at the forefront of generating solutions. Private capital or private sector money is really important as part of that. So one of the things that I adore about this platform is looking at the complex challenges like climate change or responding to a global pandemic and seeing that private sector sort of creativity and the capital available for addressing those problems.
So with all this capital available and with an issue like climate being so prominent, on the topic of environmental, social, and governance, ESG, we talked about it a little bit before. Considerations have become a focus for every asset class, and private capital, no exception. Fund managers, institutional investors across the world emphasizing sustainability and governance as part of their research and ongoing due diligence. Can you talk about some of the trends that you're seeing in the space?
Yeah, again, this is where I love that you're able to look at portfolio companies specifically. If you look at, the many platforms to invest in publicly traded exchanges or ETFs, et cetera, there's a lot of concern around greenwashing. And I certainly appreciate that that's an enormous challenge. There's so much confusion around language. Because we represent managers building hydro plants or off-grid solar or, investing in specific platforms in these markets, we're able to identify and talk about it in a much more specific way, the impact that those investments are having. Frankly, there's just less of an opportunity for greenwashing when you're investing directly into projects than when you're investing in publicly traded companies. In thinking about how we were going to address this at Gpca, we said, rather than coming up with a set of principles or a guideline, let's just go directly to the portfolio companies. And this year we published our first ESG deal book, Investing for Growth deal book, which profiles 18 cases across Africa, India, Latin America, Southeast Asia, et cetera, with everything from a paint company in Madagascar to e-pharmacy in India, a seeds company in India, an ed tech company out of Brazil. And let's see how those investments, who they're hiring, what kind of job creation they're generating, what percentage of their employees are women, how are they training their employees, what sort of environmental impact are they having and how are they thinking about their environmental footprint. So looking specifically at the deal level is something that we've thought is a really more valuable way of profiling the opportunity in these markets. We're also going to be giving out the first Gpca Deal Awards for Best Environmental Sustainability, Best Social Impact, Innovation, Gender Diversity. And those awards are evaluated by a series of independent institutional investors. It's not something that we sort of put our hand up and say, well, we like you, or we're doing this for our marketing platform. There's meant to be real rigor around it, because my experience is that when you lead by example, when you give GPs the opportunities to step up and position around a particular deal, others will look at that. And it's, again, you really see this movement in ESG. I have to be honest with you, 5 years ago, I was trying to do ESG panels and have managers talking about ESG. And the reaction was, I'm really focused on fundraising. I'd rather talk about performance. I don't want to talk about ESG. That's just soft. We're not an impact fund. That paradigm has shifted completely. It is now an absolute, it's remarkable how quickly it's shifted. The focus on impact and ESG is so central for institutional investors looking at opportunities globally today that I think managers understand it's something that is important for them to be able to demonstrate, success with.
On the one side, you have people sort of wondering how much greenwashing is going on. On the other side, you have talking about creating this award and the rigor that goes around it. How actually do you roll your sleeves up and either get the right people around the table or establish the rigor and sort of get above any concerns that this is greenwashing?
We did this program for a number of years in Latin America. We're expanding it globally. I had something I had executed on for a number of years. I can tell you last year, we published a deal book, as I mentioned. I was personally on Zoom calls with not only GPs, but portfolio company executives from Vietnam to the Middle East to Brazil, in deep dive conversations. So we actually spend hours talking to both the managers and looking at the businesses through a very careful lens. We start with this kind of deal case platform. And then we have a panel of institutional investors to whom we deliver a set of indicators. It usually takes about 6 or 7 hours. We have to really ask our friends to do this, to go through each one of the indicators on each one of the deals. But because this is being done at the deal level, it's much easier to have those detailed statistics and data on what the transformation has been within the country, within the company, and frankly, weed out anything that appears to be greenwashing. It all comes back to really knowing the markets well, being very independent about how we're approaching it, and getting some good partners on board as judges.
So you threw out an example earlier of a paint company in Madagascar, and I'm kind of curious, what that company might be like and how many employees they have, how long they've been founded. That may have just been an example, or there may be a specific name behind it. But generally, Cate, and we talk about this at the New York Stock Exchange all the time. It's always on Stacey Cunningham's mind when we realize at what point in a company's life cycle they're actually tapping into the public markets, because a lot of private companies are staying private longer. Does this trend extend globally, and how does this affect the group of investors that you represent?
It really is a fundamentally different dynamic in so many of our markets. And I can say, in all honesty, that the listing on a U.S. exchange is considered the hallmark of success for portfolio company executives and startup entrepreneurs around the world. We've seen many of our member firms list on U.S. exchanges, over the years, and that's always considered an extraordinary success. A lot of the times, the investors are looking for that liquidity event, right? So exits are a critical part of what we measure in our data, and what we're looking to, those are the case studies of success, is when you're able to point to a liquidity event and a successful outcome. Nothing better than an IPO. So I wouldn't say you see that same dynamic of companies wanting to stay private for an extended period of time, but there are windows of opportunity, right? So, again, currency volatility has been one of the great challenges for private capital fund managers across these markets, is in terms of where they are with currency exchange, and when the timing is going to be right, or again, macro trends, right? You do see windows in which it might be more likely that if you want to list or have an exit opportunity, the response from market participants is not going to be there if you've just impeached the president, or if the currency has been depreciated by 30% over the last few months. So there tend to be windows of opportunity for exits, and typically managers and entrepreneurs are looking for those windows. And when that window opens, they're looking to take advantage of it. Now, having said that, on the venture side, where we've seen so much growth over the course of the last, 5, 6, 7 years, the amount of money going into venture-backed startups across Asia, Latin America, Africa, Central Eastern Europe, Middle East has really exploded. And I think there you see greater discipline from entrepreneurs to not you don't see these companies being loss leaders. You don't have a WeWork or the extraordinary billions of dollars going into companies that have not yet turned a profit. Most countries and most entrepreneurs, frankly, just haven't had that opportunity. China would be a bit of an exception. There you do see, very, very large companies that have gone public, and there's just more money and more liquidity for participating in startups there, both for rounds and then for IPOs. But in a region like Latin America or in Central and Eastern Europe, entrepreneurs have had to be much more disciplined about being profitable and demonstrating that before they're going to be able to get retail markets confidence, retail investors confidence, and launching an IPO.
Last fall, you shared with Private Equity International that Asia was really the most attractive region for private investors. Your comments seem to resonate with other investors too. KKR closed a $12.5 billion fund. TPG, Warburg Pincus, Blackstone all closed funds that were oversubscribed. Has the trend continued, and what opportunities are so attractive to private equity investors?
It's fundamentally a question of market scale. Goes without saying, China's a market of 1.4 billion people. India, just about there as well. And they're both, almost 1.4 billion. So market scale matters a lot for both private equity and venture investors. The larger the population that you're able to serve and the platform that you're able to have, the easier it is to put money to work. A lot of investors think about Africa in that same way as well, and they think about Africa or Latin America as an integrated market, but the Asian economies really dominate. And Southeast Asia has just been particularly dynamic, again, in the venture and the tech space in recent years, with the growth of a Grab or a Grab and a Gojek, merger, the IPO that's coming there. So there's the scale of the opportunity in the market. There's already also been extraordinary wealth created in those markets. As we know, China is, minting billionaires at a fairly quick clip. And so there's the entire drive into wealth management as a huge opportunity, and U.S. firms moving into China around wealth management. But you also see great wealth creation in India and in Southeast Asia. And so there's local sources of capital as well that are investing. And then you have sovereign funds in places like Singapore with GIC and Temasek. GIC and Temasek are some of the biggest institutional investors into not only Asian opportunities, but other opportunities globally. So when you think about investing in global markets, this comes back to this key repositioning away from the idea of emerging markets. The scale of the opportunity in places like China, India, and Southeast Asia, the amount of wealth that's been generated there over the last 10 years, and the opportunity to tap into those local institutional investors as LPs and funds, to drive money into growing sectors from healthcare and education to infra and climate. The scale of the opportunity in Asia has really been bar none.
So moving away from China, India, Southeast Asia, a little bit more toward your old neck of the woods, in a summit in 2016, you said that Latin America, Peru, Argentina in particular, were poised to attract more capital as the political environment favors friendly policies. What's the state of private capital markets in Latin America today?
So looking to Latin America, what's really been extraordinary is the growth of the venture opportunity in the region. The scale of money going into venture-backed startups over the course of the past 5 years has accelerated dramatically. In 2017, we surpassed $1 billion being invested in venture for the first time. And between 2017 and 2019, we went up to $4.64 billion that's full year investing in 2019. We've just finished the estimate for the first half of 2021, and that's looking like $6.2 billion. So far surpassing the full year record from 2018 already just in the first half of this year. So the growth has been absolutely extraordinary. I mean, Nubank is one of the fintechs that stands out. I think they recently surpassed a $40 billion market cap. I remember their founder, David Velez, when he was working for Sequoia before he founded Nubank way back in 2012. Fast forward 10 years later, he is managing a company which Warren Buffett recently committed $500 million to. So you mentioned Rappi in your opening remarks. And this is another example where you see greater discipline. Tech entrepreneurs in Latin America have been forced to do more with less capital. Historically, you haven't had that extraordinary liquidity that you see in a U.S. market or a China, where valuations are really not as attractive or competitive as they are in a region like Latin America. So I'm happy to say that the tech opportunity in Latin America, despite the challenges of the pandemic, is very robust today.
Intercontinental Exchange, long such a dominant player in U.S. and European oil and gas markets, certainly with the Brent benchmark, also the WTI in the U.S., recently moves into the Middle East, working with the United Arab Emirates, starting ICE Futures Abu Dhabi. Cate, investment in the Middle East so often focused on oil and gas, but your research has found there are a lot of burgeoning opportunities also in fintech, delivery, logistics, entertainment, healthcare. What are the hotspots you're keeping your eyes out for?
Well, here again is where we see, precisely as you reference, a strategic shift away from natural resources. So we see managers much more focused on tech and tech opportunities. We have seen some successful IPOs and exits out of the Middle Eastern market over the course of the last year. We also did a case study of Fine Hygienic that was from our deal book backed by Gulf Capital, which is paper goods, paper products. They wound up producing masks as well. Feminine hygiene accelerated dramatically. So just even basic consumer goods that you see an opportunity for private capital managers to come in, professionalize, scale, serve unmet need. There have been so many areas where maybe there's been a reliance on imports or sourcing from other parts of the world. And now there's an opportunity to build domestic champions or also companies that are scaling across multiple markets in the Middle East. We also saw that MENA network of North Africa, so Egypt, Morocco, other parts of North Africa. There are a lot of managers that have a strategy investing across the Gulf or launching a business that has come out of the Gulf and expanding it. Particularly fintech, we've seen a number of examples of this, expanding it into North Africa and then using North Africa as a jumping off point for pan-regional plays in Africa as well.
Cate, what's next for Gpca?
Well, it's a really exciting time to be leading a global organization that's connecting investors around the world. To your earlier point or question around global cooperation, there's never been a greater need and a greater opportunity to communicate and connect investors at a time when so many markets have looked inward, and yet at the same time, the liquidity in the world demands, the opportunity to diversify. As I mentioned, we have Canadian pension plans. CPPIB is on the GPCA's board of directors, and all the leading Canadian players are members, as are many of the sovereign funds. And they're all looking 5, 10, 15, 20 years into the future. So in terms of thinking about the future, that's really by definition who we are as an organization. And I would say, again, coming back to those core theses of climate, ESG, and technology, these will be the drivers of opportunities in these markets. These will be the drivers of opportunity and of returns globally. I am convinced that there will not be a shift back to an earlier mindset where governance, where environmental sustainability, are not a priority for investors. And so to be at the forefront of influencing the industry and positioning around it in those spaces is really an extraordinary opportunity. There'll be much more that we'll be doing. It's been frustrating not being able to travel. I haven't been on a plane for quite some time now, and I was used to being in 3 countries or 4 a month. So really looking forward to getting back to traveling again. And
where's
being
the first trip planned for?
Singapore is there. I keep hearing it swing back and forth because I haven't actually visited our Singapore office since it's been open. My was one of my last international trips in January of 2020. So really looking forward to being close to the ground and working with our partners at local associations and local member firms. We have a host of training programs that we do in market for GPs. We host, private meetings for investors, take institutional investors to other parts of the world. So critically, we're looking forward to being back on the ground locally, meeting with managers and looking to just evangelize capital into these markets, into sustainable and forward-looking investments going into the future.
Cate, Ambrose, come back after you've been on the road for a while. Report back to us what you're seeing.
Thanks so much, Josh. Great talking with you.
Thanks so much for joining us inside the Ice House. And that is our conversation for this week. Our guest was Cate Ambrose, Chief Executive Officer and board member of the Global Private Capital Association. If you like what you heard, please rate us on iTunes so other folks know where to find us. And if you've got a comment or question you'd like one of our experts to tackle on a future show, email us at icehouse@ice.com or tweet at us at IceHousePodcast. Our show is produced by Stefan Capriel with production assistance from Pete Ash, Ken Abel, and Ian Wolfe. I'm Josh King, your host, signing off from the library of the New York Stock Exchange. Thanks for listening, Talk to you next week.
Information contained in this podcast was obtained in part from publicly available sources and not independently verified. Neither ICE nor its affiliates make any representations or warranties, express or implied, as to the accuracy or completeness of the information and do not sponsor, approve, or endorse any of the content herein, all of which is presented solely for informational and educational purposes. Nothing herein constitutes an offer to sell, a solicitation of an offer to buy any security, or a recommendation of any security or trading practice. Some portions of the preceding conversation may have been edited for the purpose of length or clarity.